Well, thank you everyone. My name is Dave Schimmel. I'm here from Forrester's Life Insurance Annuity Company solely for Jill Tisdale because she wanted to see this. Actually, if I'm not my most upbeat self today, I'm a little down because the Mets lost last night. You know, for all you Cubs fans, congratulations. I hope you win. But seriously though, when Curt reached out to me and asked me to put this together, I immediately said yes, and then I immediately said, why did I say yes to that? You know, I'm the only client doing this, really? I gotta do this. But seriously though, it was a good opportunity, I thought, to kind of explain some of the things that we've done and some of the advantage we've taken from the system that I'm not sure that everybody, or if anybody, is really utilizing today. You know, again, using ADMI to generate illustrations, but really we're doing a couple of things with that now. So proposals in ADMI, I'm not sure if any of you are familiar with it, if you've used it at all. The prop screen in ADMI provides the ability to run hypothetical illustrations as well as retrieve ones previously generated. What that does for us is very useful in our testing when we're implementing new products. We're able to leverage that a little bit in our testing, and certainly so we've been able to do that with our VUL product that I'll talk about in a little bit. You're able to view the results very easily and retrieve a detailed record of the actual output that you would get from there. Illustrations, it's interesting. As I mentioned earlier, we were acquired in 2011, and Forrester's, our parent company, IOF, they put some pretty tight deadlines on some things that they wanted us to deliver on. We're more the variable shop, they're more the traditional whole life insurance and final expense insurance they work on. So from a variable perspective, we had a homegrown system for illustrations that our developers worked on, but it really was limited. And in order to be able to meet the deadlines that we had set forth, which, Jesse, keep me honest, I think was probably about a 9-month deliverable on a VUL product when we had never administered that before, was fairly aggressive, and we knew that our biggest challenge was going to be illustrations. How are we going to make that happen? Our developers were used to actuaries providing them with spreadsheets, and then they would basically back solve. They would use the calculations within the spreadsheet and basically add that into their program, and then basically, produce the output. That wasn't going to work this time for VUL with the complexities that the product had and the sophisticated solid capabilities that the field wanted. It wasn't going to work for us. So just, in general, creating the hypothetical illustration, we can talk about a little bit here. It's basically like putting up a new policy within prop. So by selecting the product type and entering the information as if it were a new policy, you'll create a temporary record that will allow you to generate proposals without saving an actual policy in the system. However, you can still retrieve that temporary record in prop and take a look at it. And basically, these are some of the screens. I apologize for the size, but you can only fit so much in the slide. So basically, our VUL, we took that and we basically used the prop screens, select the parameters that we wanted to set for that product. Here, I think we're looking at basically reducing the premium, but there are a number of different solves you can do. But for the basic illustration, you would just select the parameters to maturity. It's unit-based because it's a variable product, so you have different rates of return. In this case, we normally run 0, 6, and 12. So if some of you are out there looking and saying you actually run illustrations at 12%, we do. That was kind of an argument between our sales guys and the home office. We lost that argument. But we'll see who wins in the end. As far as that's concerned, though, we basically have this output that's generated out of ADMI. Again, when you look at this here, it just looks like a bunch of numbers, obviously. But due to the illustration requirements for variable products, we run 3 different interest rate scenarios, or Qs in prop, a non-guaranteed, a current rate, and then a guaranteed rate in the midpoint, actually. For those of you who are familiar with illustration laws, we had to provide certain midpoints as well, which proved to be a little bit difficult and challenging for us in this process over a 4 or 5 month period while we were working on the illustrations. Prop, as I mentioned, also has the capability to run a multitude of scenarios, changes in premium schedule, loan activity, surrender activity, and what I call specific product solves or sophisticated product solves for salesmen. Running basically looking for the face amount or the premium to generate a certain cash value at a certain age, or to be able to reach maturity. What's the minimum premium that you'll need based on a certain rate of return to reach maturity? So those are some of the things that they wanted. We are still working actively with our partners at LIDP to enhance that capability. What we kind of did with our captive sales force, we rolled it out as quick as we could with what I would consider maybe some limited functionality as far as illustrations are concerned, just to kind of get them familiar with VUL. It was a product that they were used to going up against, not used to selling. So they were used to poking holes in VUL, and this has kind of changed that a little bit. It's actually been an exciting time. VUL is quickly becoming our most sold product, our most popular product of our sales force. They literally are starting to understand now, after 2 years of being in the market, how you can create a policy specifically for an individual, where our other variable life products dictate the premium you can pay based on the face amount that you're applying for. So this has been interesting. It's been challenging. We've certainly got a number of calls in the model office asking, how do you do this, or why is it doing that? So it's been a challenge for us to kind of field some of those questions and walk them through how to make that happen. But I think the biggest thing is that we're fairly small, especially compared to some of the companies that are here today. And we looked at LIDP as, or we were hoping to look at it as a one-stop shop for us. I mean, our parent company has multiple systems. I think they have 5 different administrative systems. They have different illustration systems. They have a different reinsurance system. They have a different claim system. They have a different underwriting system. So I'm sure they have others too. I just forgot to mention. But if you hear all that, it's kind of dizzying to me to think about managing all those systems, managing all those relationships with the vendors. I just don't know how you make that really happen. And for us, given our size and the resources that we had available, we felt that we needed to partner up with LIDP on the illustrations, and Bill was very open to the idea. John and Mike, certainly with the help of Curt and Dave Kasarsik, made that happen using web services, and I'll get into that a little bit. This is just kind of the cover of our VUL product, but we had a tight implementation deadline. Like I said, we had a 9-month deadline, and it was hard. It was set. It was 3/31. You're going live, come hell or high water. Not the best way to get things done, but it certainly was a lot of hours, a lot of late nights, and making it happen, working with the actuaries very closely. Lack of familiarity with the product. So again, we used to sell UL, but VUL is certainly a different animal, if you will. We had limited internal resources, being a small shop, plus competing priorities. So we had other projects as a life company and just as an organization, and so those IT resources were certainly not as readily available to make all this happen. So if we couldn't leverage the people that I mentioned, it would have been more difficult. We probably wouldn't have been able to meet that deadline. So for all those reasons, it really made sense for us to use ADMI to run our hypothetical illustrations for VUL. Basically, what we did is we worked with everyone to communicate between our homegrown illustration system and LIDP by using web services in order to send the illustration specifications from our front end illustration system, where the agents were used to going to run those illustrations. It would communicate with ADMI through a web service, and keep me honest here, Dave. I guess I'm being very general. It was developed between the two systems to talk to each other, and then basically once that information was passed to ADMI would run based on, or prop would run, I should say, based on the parameters that were set by the agent, and then the information would be passed back to our system, where our programmer basically took that data and then just reformatted it into the finished product that I'll show you shortly. So basically this screen here, if you can see my cursor, is our homegrown system. This screen here is prop, and basically the two are communicating to each other back and forth, and that A lot of testing went in there, a lot of time, but we started to see the benefits beyond just running this illustration for VUL. We started to see that there were, this is what the finished product was like, there were certainly some issues or hurdles that we had to get through, even after we went live. You know, we're probably 45 sales offices around the country, and you know, with bandwidth issues and things of that nature, there were certainly some response time issues, and we had to invest in our infrastructure. I believe we purchased a separate box or server for this capability, and I think it was a Red Hat Linux box, if I remember correctly. For those of you out there that knows really what that is, and it really happened to reduce the response time tremendously. Plus, we worked with John and I believe Mark Dickinson, the actuary on LIDP's team, to speed up the processing time. Basically, the interpolations back and forth to figure out when you're running the solves and things like that, where the point was that you were looking to hit. You know, we were getting illustrations running. They were used to illustrations running at maybe 10 or 20 seconds for a general ledger or a ledger illustration. VUL obviously is a lot different, but when you were getting a 2-minute response time, they weren't happy. Let's just put it that way. We were getting quite a few calls. It started with IT, and then it made its way towards the home office. So again, with the partnership that we had with LIDP, and I really truly believe this, they were immediate in their response, immediate to meet our needs, to help find a solution. It may not have been easy. We still are, like I said, we're still constantly tweaking things to make it a little bit better and improve it. But if it wasn't for LIDP's response and dedication to making this work, it wouldn't have happened. If we had used an outside vendor that we didn't have a relationship already with from our admin system, it would have been more money, more time, more effort, and probably more complaints building up in the process. And also maybe lack of sales, because the agents would have turned away from this and said, I'll sell something that's running in 10 seconds or 15 seconds. It's easier, that I understand. So with all those things, it's really helped a lot. So when I say learning points here, though, it's just these are the things you kind of need to know from what we've learned as far as infrastructure cost, response time, the custom solves. These are things that weren't necessarily there day one, but they are there now today, at least what we've built upon so far. And probably why I'm standing up here today, so hopefully other clients will be willing to build upon that too with us and help grow this to even more than it is now. Some of the benefits realized, though, it was a less costly solution. We did look to illustration software vendors to see if that would help. They couldn't meet cost, and they couldn't certainly meet the timeline, which was interesting to me because that's what they do, and yet LIDP could do that for us. Again, knowing us, knowing our products, already building the administration system, so the calculations are already there. It was an easy, natural fit and an easy, natural sell to our board and to our senior management team. More efficient plan file testing, probably not when we went live, but certainly since then. When we want to test the system to make sure that it's calculating correctly and that all the calculations are working properly, being able to use prop is a tremendous benefit for us. It's reduced testing time greatly, I would say, and feeling more comfortable with the amount of testing and the accuracy of that testing. Again, you try to build these test plans that are all-encompassing yet small enough that it's not such a big deal that you're putting up hundreds and hundreds and hundreds of policies. We've been able to limit that by this plan file testing that we've done with prop. One-stop shop, again, we use LIDP for illustrations now. Obviously, it's our admin system. We use it for reinsurance. We use it for claims. We use it for underwriting. And we've built on it over 15 years. We've gotten creative, I think, and used it to its fullest capacity so far. It sounds like some of the things they're coming up with are exciting, and we can leverage those as well. But we really don't want multiple systems. We don't have to manage different systems. We don't have to have relationships with different vendors all over the place, and we're not we're not as valued as a partner, as I mentioned at the end. We're valued partners with each other and with you guys out there, because we have a vested interest in this. This is our one system. I mean, this is basically everything that we're running is running through LIDP, especially anything new business related. We do have an old block of business, very small, just sitting on our mainframe. It was a less drain on our internal resources. As I mentioned, we didn't have that many at the time, and leveraging LIDP and using their resources was very helpful. And Bill was willing to give us what we needed in order to make that happen. Again, I mentioned possible cost sharing with other clients. That really goes for anything. It doesn't go for illustrations. It goes for any of these things that you're looking at. We've done that on a few occasions, I believe, where we've taken a mod that somebody else has worked on and maybe tweaked it a little bit, but they did some of the heavy lifting. I mean, I think here we have a possibility for other clients that are looking to leverage this to kind of get together and see what the best solution, the best options are. Flexibility to customize. Again, when we were looking at other illustration systems, anything we want to do that was customizable or customized was going to lengthen the time and lengthen the cost. And it's not that there weren't additional costs to do it here, but those costs were much, much less than what we were seeing on the outside. So we stayed in-house again. And like I said, our value partnership continues after 15 years. It's really changed the course of, I think, our company, partnering with LIDP. It was the right fit in 2001, and it appears the direction that they're heading with what we saw 2 sessions ago, with Matt, I believe. It's where we want to be long term, and given our product base with the variable products, it was a natural fit for us. So I don't know if anyone has any questions. Jill?
One question. I had to have at least one for you. One thing that I'm slightly concerned about, and I'm curious if you encounter this also, is 6 o'clock every evening, our system goes down to batch processing, so it's not up and running. How does this web service that goes back and forth between LIDP and your illustrations, that joint thing, how does that work if the system's down?
So because I believe it's because of the separate server that we're using, by having it on a separate server, that wasn't impacted. Now, if that server needs to be updated, then there will be some downtime. Our IT department tries to do that, in the wee hours of the morning, I think 3 to 4 a.m. or 3 to 5 a.m. if they have to. But basically, the agents have access to it 24/7. So it hasn't been an issue for us.
Are you running an extract every early in the morning? The whole policy file moved over to the server. So there's no connection between the mainframe and the server at that point.
Right.
Because we're doing this off of the separate file, the extract file, set of files.
One question. Yes.
I want to ask this because my counterpart is someone that does illustrations, but do you guys use this? You said you use it as to bring your UL product to market, but do you use this for those policies that are now issued on that? Do you use prop as well? Or do you still use?
You mean for Enforce illustrations?
Enforce.
We will be. We are not as of today, but we will be leveraging that going forward. It's in the process of, we're talking about it, how we're going to make that happen. But it'll be a similar process. A lot of it has to do with, David mentioned in the previous meeting about DOL. We're so DOL focused right now that a lot of our projects that involve our IT resources are being put on hold. Right. So until we kind of figure that out over the next 6 months, before April 10th, I think it is, we're going to do what we can with LIDP, but then Enforce illustrations and things of that nature, or adding solves might take a backseat to them.
Do you see a lot of work that you still need to do with LIDP to get the Enforce illustrations going, or is that something just making that communication work between it?
Personally, I don't. John probably could speak to that a little bit more. I think that it's a natural move, considering we do actually use that already, I should say, Enforce illustrations for our UL product, our old UL, and our old variable life product. We basically, that was a little different though. It wasn't with web services. This was done a number of years ago. So basically, and you probably can't see it if I go back, but don't thank you yet. There is, you probably can't see it on the screenshot. There is in prop, there's a publish to web button that we basically run the prop through the system, click publish to web. That basically sent the data to a desktop application that certain people have on their desktop to run Enforce illustrations, but we haven't really provided it to the field. So basically they're calling the home office, basically our customer service area, to run those Enforce illustrations for them. So we want to take it obviously to the next level, put it in their hands, especially for VUL, because of the type of product it is. You really should be doing an annual review of the performance of the client's policy to make sure that, you know, they don't need to increase their premiums, and make sure that they're still, you know, going to reach maturity, make sure that there's no, you know, possible potential mech issues because of premiums they dumped in that maybe they weren't aware of when they ran the original or the initial hypothetical illustration.
I think I did publish the web as a custom mod for you, so nobody else knows what it is.
Oh, okay. I take that back then.
I
thought it was part of it.
Basically just does an extract out to a program of theirs, which feeds into their Visual Basic system that they have, where they do a lot of nice formatting.
Yeah, I mean, one thing we've learned is that LIDP is providing the data, but then, you know, we gotta provide the look and feel to the data. I mean, that's just, you know, the way it is. So different from maybe an illustration system, but we're comfortable with that, and our developers are comfortable with that, and it's worked. And they're certainly more comfortable now, even with the web services. One of our guys at home worked with Dave Kasarsik, like I said, a lot to make that happen. So Enforce illustration should be an easy jump, I think.
I would offer that everybody wants to brand their own illustrations with their own stuff. So we're not really going to be, we're going to be providing answers and not pretty print for you, right? I mean, because you're going to want to supply that for yourself.
Exactly.
No matter who you're working with.
Yeah.
I'll just ask if somebody in some LIDPer could give us an idea of what that Red Hat system cost. What were the costs involved in that other server? Or maybe you know.
I kind of remember, and Dave could keep me honest, maybe. I mean, I know we basically went to like Tiger something. I can't remember the website that we went to purchase it. You had kind of
Tiger Direct.
Yeah.
Tiger Direct, yeah, thank you. I can remember. I want to say it was less than $20,000, but I don't know if I'm way off base.
The hardware was relatively inexpensive. I mean, this is not a little desktop PC. This is a
Industrial.
core,
Yes.
8 bazillion bytes of
8 bazillion.
I
That you guys don't have that.
I think they
John, you're my best material, John.
I think they call that gigabytes.
The thing that cost, the hardware was relatively cheap. The licenses for the focus Cobol.
The Cobol license,
were
right.
hundreds of thousands of dollars.
I didn't think it was that.
It was like 100,000. There was 70,000 and 30,000, and they had 5 or 6 charges. Dave, do you remember better remember how much those licenses were?
I think that amount was running, you know, like several boxes,
Yeah.
and several regions on the
It
box,
wasn't-
which I.
Yeah, you didn't spend
I'm
that.
usually
You
getting.
didn't spend that.
We certainly didn't spend that. I would tell you right now. I wouldn't be standing here if we spent that. I got signed off on that bill, and then, you know, my boss would see it. So no, she wouldn't have gone for that.
What's the COBOL that's running on the Linux server doing? Because that's not where ADMI is, right? That's just where-
But it's the same
Oh,
one.
that's where it is.
Essentially.
Oh,
It's the same logic. That's the point.
Okay.
Essentially. I mean, the purchase of the box was really because of the, you know, basically what Jill brought up about segregating it from the nightly close and all that kind of stuff, so it would be accessible. And then the response time also helped a little bit, but obviously there was a little more involved in there.
But also the response time, we're really having a lot of trouble with mainframe response because of lots of activity going on in the mainframe. You didn't want somebody starting a 20-second transaction that slows down the whole mainframe to interfere with the what the agents were seeing out in the field.
All of our business outside of the life company, the mutual fund side of the house, we're all running through the mainframe. So depending on the volume at the time and the activity, I mean, obviously we started monitoring it. John was giving us some help there. We started monitoring activity in the field. Again, nobody's really running it at 9 a.m., but everybody around lunchtime, 12, 1, 2, when the West Coast woke up, it started to really pick up, and we started to see horrendous response time. So we quickly acted on that, and like I said, the response that LIDP gave us to fix that was fairly quick and swift, and made some significant improvements, to the point where I very rarely hear an issue from the field anymore after 2 years. It was really the first, I don't know, Jess, keep me honest, the first 3 months, 6 months? 6 months. Yeah, 6 months, yeah, 6. First 6 months, maybe 7. And now it's improved greatly. Again, a lot of that had to do with, I think, the iterations that they were going through to try to figure out some of the solves. If you're running a basic illustration, it wasn't that difficult. It was when they were doing the sophisticated solves, when the system is trying to figure out, where that point is, what year, what policy year. That was where we ran into some issues, and I think that's understandable.
I don't question on how many actual times do you calculate like a number, and how many different numbers in order to get one illustration?
I mean, I know, John, what did we get it down to, though? I mean, it was at some point, it was,
We're doing 3Q illustrations.
yeah,
Like 9.
something
Right,
like
you're
that.
doing 3 minimums, and then you're running the regular numbers.
I think
You're
it
doing the
was
midpoints.
3 percentage rates with 3 Qs.
Qs. I
That's
think,
9 right there,
Right.
plus a minimum premium.
Which is another
each of
3.
those, which is another 3.
You're doing
Like
12.
yeah.
12.
So it's basically running 12 props to
in
get
one.
one illustration.
Yeah. So that was the challenge, and then if you think about that as 12 props, plus if you're running a solve for each one of those, you're then trying, I think it was, at some point it was probably like 18 times to try to get to the right number, and I think we got it down to a much more reasonable,
On one of them, we ended up with a direct solve.
yeah.
So
NPT.
What a question
Sure.
too. I know we touched briefly on it at lunch today, but I'm going to reiterate it. One thing our agents keep asking about is cost of insurance. What is the cost of insurance on this particular product? And I know on our current product screens it doesn't list that. And this may be an LIDP question also with the proposals, because so many more of our agents are starting to ask for it. They're either getting smarter or they're trying to figure out what's best for them or their AI anyway. Is there any look at possibly adding that into the prop screen to be able to pull out those individual?
I guess the question is, what do you mean by cost of insurance? Because
Our-
cost of insurance is going to be different every month.
Right. Our fixed UL product, there is a cost of insurance for like the net amount of risk has a specific cost of insurance per unit of that net amount of risk.
Which
So
changes,
not the actual, not the target premium or the minimum premium, the actual
but your
cost of
rate
insurance.
might change
The
every
actual
year.
per
The
unit.
actual per unit.
Per unit per month.
Jill,
We're running props now. It does have the monthly cost of insurance for that product.
Your student.
In one of the columns.
Jill, if you look at the slide, it's got it on the,
Oh,
I tried to
missed it,
include
my
it. It's
bad.
okay.
I see it, question answered.
So yeah, the cost of insurance is there, and talking to Jill at lunch, what we're looking to do, because some of our sales force has been asking the same thing, I haven't actually told John and Mike about this yet, but we are looking, the data's there, right? So we're looking to get that passed over in an XML2 to create additional pages within the illustration. It's just, how many pages do you want in an illustration at some point? So we're kind of weighing the cost benefit of that. But yeah, we're having some of the same questions. But the data's there to be able to, there's so much data actually that we're not even, I would say, providing in the illustration. It's not necessary per se, but there's a lot of data out there that we're not even necessarily leveraging for the actual funnel view. So if you have some of those ideas, I encourage you to go through prop and kind of take a look and see what they offer.
That's a tricky thing, right? Because it changes every month.
It does.
And depends upon how much premium you paid, and just, they may be asking for it, but I wonder if they really mean it.
Well,
Some of our agents mean it.
they,
Well, until, well, because it's free.
They probably do though, because we've looked at competitors just to kind of get a sense when we were actually building the illustrations for VUL, because they're different than anything else that we've done. We certainly looked at some competitors to see what they're offering, and some of them do offer single pages just highlighting cost of insurance and charges and disclosing that within the illustration. So it is out there. I mean, to your point, it does change monthly, but it's a hypothetical running it at that time, and then obviously it's kind of meaningless after they go live, and it all depends on how much they pay and performance and so on and so forth.
When they pay it.
Yeah. All right, well, if there's no other questions, I'll turn it over to Curt.
So we want a slideshow, don't we? So I'm Curt Foody. I joined LIDP in 2014. Prior to that, I worked at Salmon's financial group for 33 years. And I had responsibility for all the life development activities. So I've lived, I headed up the illustration team. I headed up the mainframe product development team. So I'm very familiar with this space. At North American, we had a homegrown illustration system. We merged with another company that had a homegrown illustration system, which we then merged, which was fun to get two teams to agree on how to do that. But anyway, I'm very familiar with this space. Salmon's was running LifeCom, Life 70, and CyberLife, none of which had point of sale illustrations. LifeCom had in-force illustrations. CyberLife didn't have any in-force illustration capability. And frankly, I'm not sure what Life 70 was doing for in-force illustrations. The whole point of this is that, and we before I joined LIDP, we talked about what it would be the holy grail of product development. And so we have our search for the holy grail of product development, which is really build it once, right, and then you're done. And so, which oddly enough is what we have, right? So, but what can you control in product development? Everybody's looking for speed to market. What are the benefits of that? Is beating the competition, gaining market share, winning the agents' hearts and minds. Making sales goals for the year is always an important thing to the senior executives because their bonuses are based on that. And other things that can happen is, you come out with XXX or other various things that could change your reserves. XXX, I don't think lowered reserves, but I think some of the CSO items may have lowered reserves. And then, of course, there's, meeting regulatory deadlines. So everybody's, if you're looking out for a new admin system, what they're going to tout to you is speed to market, right? But speed to market really begins with your sales illustrations. You have to have an illustration on the street to have speed to market. So if you're doing product development, well, here are some of the steps, there may be others that you can think of here, that go into building a product. Someone's got to have a product idea generation, which actually gets pretty difficult, right? Not a ton of new ideas at product development. But once someone has one, you go through your actual feasibility studies, etc. You do marketing reviews of those ideas. And frankly, those can take months and months and months. I've sat on those committees. People can go on vacations and not have a meeting for a month because the head of marketing isn't there, right? And then you can have compliance review, and then you get to systems implementation when all the other people have done all of those things. And then it's, well, how fast can you do it, right? There's no, he's on vacation, we can't move forward, it's, let's get it done, right? So that's product implementation. So here are items that I would say go into day one. And at Salmon's, we did day one and day two. I don't know what your companies are doing. But the need for speed to get a product to the street often got us to the point where these are the things that we would have to do to launch a product, and other things would end up on our day 2 list, right? So sales illustration being right at the very top of the list. New business and underwriting, if you sold it, you needed to be able to underwrite it and issue it. Policy pages, cost disclosures, and then of course you need to be able to bill it, and you need to be able to pay the agent, right? So what's the big deal about all of this, right? Well, you're duplicating your effort, right? You're duplicating, if you have an independent sales system, you're duplicating your effort there. Policy pages are doing functionally the same thing. Your policy admin system, although it may be doing this processing 1 month at a time, is doing the same functions. Statement of accounts are doing projections, right? It's regulated, I'm sure you're, on universal life policies at least it is, that you project out when the policy is going to lapse. Typically people are doing like 4 projections because the government has stated that you need to project with no premium payments and then guaranteed assumptions when the policy will lapse. Well, no one wants to show that by itself because a lot of these policies will lapse the next month. So everybody's right with those statements is doing it on a current basis with premium payments, so that the clients aren't calling and going, why is my policy lapsing next month? And then of course there's in-force illustrations. Out in the industry, people are using standalone separate vendors to do their point of sale illustrations. And as I said, some of these systems, some of the older systems don't have the capability to do this, so they're also using those same vendors to do their in-force illustrations. So more of what's the big deal about this? Well, you've got different technologies, you have different resources, potentially multiple vendors. Different companies are using different terminologies for the same thing, leads to confusion. And then you have to reconcile all of those systems together, right? Which is no small feat, by any stretch. That's not a small feat. So you've got to educate all these resources, programmers, BAs, QAs, and you can get that kind of expression. All right, so if you're dealing with a third-party vendor, you got to educate the vendor on your product, and frankly, they have multiple business partners that they're dealing with as well, right? So you have to get on their schedule. So, at North American, at Salmon's, where it was all internal, the people didn't worry so much about what the schedule was because they were homegrown employees who they could dictate dates and timeframes to. With an external vendor who has multiple clients, that's not as easily done, right? Especially if there's a regulatory issue coming up that's going to hit all their customers at the same time. They don't have the resources necessarily to deal with all their customers at the same time when all the customers come to them at the same time. Again, you have to reconcile the vendor, and so they have to do custom work. Rounding becomes a big issue when you're dealing with all these systems. Minimum premiums. So a minimum premium on your sales illustration is 1 penny less than your admin system. Well, what happens when you give that client the illustration and all of a sudden 1 penny more is going to lapse his policy? So you need to figure all that out, and we spend tons of time. You talk about building intolerances into your systems to deal with that, but frankly, that doesn't really work. Another example of that would be a 7-pay calculation, right? So if you're 1 penny too high on your 7-pay, you have the adverse effect, right? Where all of a sudden the guy is now paying money that really is going to fail the policy as under TAMRA regulation. So all of that comes into play, and it gets really hard. So given all of the activities, if you have multiple vendors, multiple systems, you're going to have to come up with a lot of resources to attack your projects. Okay. So we did for foresters, foresters came to us with MPT, and frankly, which is the necessary premium test that Dave Berry talked about earlier today. And I'm using MPT as a case in point for why LIDP is a good solution for foresters. So MPT is a fairly complex item, and what you see before you in the next several slides is from the Society of Actuaries 2014 tax winter meeting, where so they're talking about this at every actuarial meeting they have, right? And because it keeps coming up and up, and 7702 is many of you hopefully know is the DEFRA regulation around guideline premiums in CVAT processing. And in 1988, TAMRA was passed, and TAMRA spoke to necessary premium. I've done a lot of research on this for foresters, looking up what this all meant. I'd never heard of it before coming to LIDP, and we were selling these products at Sammons. And what foresters was doing was they were not increasing the face amount of the policy if it had a quarter increase, because they were at least smart enough to know, which other companies I've dealt with weren't, that, and I'm not going to read all this because it's directly out of the society stuff, but the last point I think is an important one for any client who's got CVAT. So CVAT has been described as self-adjusting. And so what companies have been doing, not understanding fully the regulation, is that if you put enough cash value into the policy, it's going to cause a quarter increase. And the self-adjusting part is you increase it, and now you're within the regulation. That's not technically true, right? There's this necessary premium test that you have to pass to determine whether that increase is a material change or not. And so I know there are companies that are not doing that, and frankly, if you're using our system and you're just increasing it without doing the test, you may not be in compliance. So what is necessary premium? It's an exception to the material change rules, where if there's an increase in future benefits, the corridor increase, there's a test to be done, and the necessary premium is the premium required under the contract to fund the lowest benefit during the initial 7-year contracts of policies contract. The rule is that if you have not paid unnecessary premium and you have an increase, you can defer. You have a material change, but you can defer the material change until such time that you have unnecessary premium. Then you had the material change. If you receive the unnecessary premium 5 years later, you had a material change 5 years ago that you didn't tell the client about. Let's go through that. All right. So as Dave covered earlier today, the test itself is you have to calculate this deemed cash surrender value, which is another side fund done on a guaranteed basis, 4% interest, and the test is against the NSP of the policy, which changes every month. So what we did for foresters is we built a calculation that would calculate this NSP, which is using qualified additional benefits. Also includes policy changes, and that's an important point for this topic of illustrations, by the way, in that that when we installed this logic, it was shared across our sales illustrations, our admin system, our in-force illustrations, and our statement of accounts. So it's the one and done that Dave was talking about. And then we administer the test, and we can tell whether the premium is necessary or unnecessary premium. So again, we're sharing this logic across point of sale illustrations. cost disclosures, policy pages, if you're using our system to generate those. It's embedded in the policy administration system. It will do the 4 statement of account projections using that logic and is in our in-force illustrations. To me, this is the holy grail of product development. There are some other side benefits to this. As I said, we would launch a product and we would have a bunch of day 2 issues where if there was frankly, the admin system didn't need to worry about it. We never worried about increases in the first year, right? The contracts would even say you can't do them in the first year. So your admin system wouldn't be worried about it, but your point of sales illustration has to worry about it because the agents are going to run them. But if you're developing it on our system, you're going to worry about it, you're going to do it once, you're going to do it so that you can do your illustrations, and you won't have a day 2 list. You'll eliminate your day 2 list by utilizing this. Your in-force illustrations will match your sales illustrations. And maybe some negative campaigning here, but a lot of the vendors out there are going to have some difficulties with this. That you've got an in-force illustration and now you've got a master record that you need to get to them so that they can do projections. Well, a lot of these systems aren't built to take one middle of the month, where I've got a cash value in the middle of the month. So they're going to either start at the beginning of the year or they're going to start at a month. And frankly, you're not going to get the accuracy that you would get on an in-force illustration run against ADMI because it's got all the data. There doesn't have to be any pretending. It's got the data right there. So these are some of the issues, some of the difficulties that a vendor will have with dealing with in-force illustrations. As Dave said earlier, our system does premium quotes. We can do policy changes, premium solves, loans and withdrawals, face amount solves. You're going to use your own front end. You're going to do your own branding, put your own look and feel on it. We're going to utilize web services to communicate back and forth using XML feeds between your front end and ADMI. And here's a side benefit to using the administrator as your illustration system is you know exactly what the agent's running. It was always an issue is, did the agent upgrade to the most current software? How do we force them to upgrade to the most current software? If you want to control interest rates, you can do that as well, etc. So, when determining your illustration system, you need to choose wisely. Or it could end badly. LIDP is the wise choice. And to quickly bring your product to the market, although I can't speak for how, Holy Grail Ale is maybe not the best thing in the world, but there you have it. So these are just